Hey people, I welcome you back to Caroline's Online Academy, and I'm here back with another question from the chapter Accounting for Share Capital. And this is also a question which requires you to prepare the schedule of share capital and the phase of the balance sheet showing the share capital. Now, this is the second type of problem. Actually, I should say that Cbse surprised everyone with this question. It is a very simple question, my dear children. It's like the most basic question you can get for 3 marks, but it was slightly tricky because of the adjustment that was given here. It was not given earlier. Understood? We go ahead and read the question. NK Limited, a truck manufacturing company, is registered with an authorized capital of rupees 1 crore divided into equity shares of rupees 100 each. The subscribed and paid capital of the company is 50 lakhs. The company decided to open technical schools in Jalawar district of Rajasthan to train the specially able children of the area. It is planning to provide them employment in its various production units and industries in the neighborhood area. All that is nonsense. To meet the capital expenditure requirements of the project, the company offered 20,000 shares to public for subscriptions. The shares were fully subscribed and paid, present the share capital in the balance sheet of the company as per the provisions of the Schedule 3 of the Companies Act 2013. There is no calls in arrears, there is no share forfeiture, and yet people got this question, or people get this question wrong time and again when I give it in the question paper as a part of the examination. So let's go ahead and solve this question. I'll tell you how this question is slightly different from the other questions that we solved earlier. The first thing is, I prepared the phase of the balance sheet. So I wrote in the books of NK Limited, balance sheet as an NK Limited, and then particulars, equity and liability, shareholders funds under the share capital. I've written the note number, I have current year, and I have previous year. And then I go down to prepare the notes to accounts. As you can see, I have written the notes to accounts, made the notes to accounts table. I have authorized capital, issued capital, subscribed capital. Subscribed capital might be subscribed and fully paid up, subscribed not fully paid up. I have not put all of that here. Understood? Now, where is the challenge, my dear children? Let's first fill in authorized capital. Authorized capital, as you all can clearly see, it is 1 crore. Here, right here, the company is registered with an authorized capital of 1 crore divided into equity shares of 100 each. So how many shares are there, my dear children? 1 crore rupees divided by 100 will give you 1 lakh. Am I right or not? You just write that here, my dear children. 1 lakh equity shares of rupees 100 each. And then write the authorized capital amount here and do a double underline, signifying the fact that I'm not going to add it up in this share capital schedule anymore, and move on. Understood? Now, people actually did mistake here, my dear children, in the issued capital. Everyone focused on the new issue only. The company offered 20,000 now for it as issue, right? So everyone focused on that. Or some people actually focused only on this, what the company had already issued. They only focused on that. The fact is, the company had already issued 50 lakhs and it had been subscribed by the public and fully paid up by the public too. On top of that, the company is issuing another 20,000 shares. So the company had issued 50 lakh rupees. Now the company is issuing 20 lakh rupees. So the total issued capital of the company, my dear children, is 70 lakh rupees. So 70,000 equity shares of rupees 100 each. Can you believe it, my dear children? Everyone get this wrong. They either just write 20,000 equity shares of 100 each, or they just write 50,000 equity shares of 100 each. And that is so not right, my dear children. It's a very easy question. Everyone should have got 3 marks in this question. Anyway, now moving forward, we also have to write the subscribed capital. Now, subscribed can be subscribed and fully paid up, or subscribed but not fully paid up. Now, subscribed and fully paid up is only possible if it is fully called up. They've clearly told in the question the shares were fully subscribed and paid. Fully subscribed and fully paid up. They themselves have given it. You don't even have to think. You directly, under subscribed capital, directly you write subscribed and fully paid up. How many shares, my dear children? 70,000 equity shares of rupees 100 each. And that will be 70 lakh rupees. So my total is going to be 70 lakh rupees. I'll go ahead and write the total in the current year in the share capital. And with that, my dear children, this problem is over. Imagine how simple this problem was. The only problem here was people did not recognize the fact that the shares that are already been issued will also be part of the issued capital and subscribed capital. How so easy it was. Am I right or not, my dear children? Sometimes when it is like so simple and straightforward, to put in a little bit of more thought into the whole thing. Understood or not, my dear children? I hope you got this. I'll meet you with another problem in another video. Till then, you people take care, have fun. Please do share these videos with your friends and all. No, it's a compulsory question, so let them also get those score mark and subscribe to my channel. I'll be really grateful. Leave a comment, heartwarming comment, or some feedback comment, or something. Just don't be indifferent to me. Say something and go. It'll be nice. Okay. You people take care, have fun, and